Hello and welcome to the Chart of the Week. My name is Pete Stolzers and I'm the founder of www.oneoption.com. Before I get started, I'd like to encourage new visitors to view the introductory videos. They describe my systematic approach to option trading. Each week, I'll go through a part of my routine and I'll identify a very good prospective option trade. To learn more about my approach, please visit my blog. It uses the number 1 in the web address. To try my research products, please visit my research site. That web address spells the word 1 out. Both sites are linked, so as long as you remember to go to www.oneoption.com, you'll ultimately get to where you want to go. Since 75% of all stocks follow the market, that's where my analysis starts. Let's take a look at what the market's done in the last week. This is a chart of the SPY. As we can see, the market was in a very steady decline. Not too many short covering rallies. Straight down to the 128 level. And as we know, the SPY 125 level marked a capitulation low from January. So we're drifting down to that level, and it looked as though we were going to test it. Yesterday, the market had a huge gap up. It pulled back slightly after the open, and then it surged higher. And here we can see that it closed around the 133 level. This 133 level on the SPY is very important because it marks a large horizontal resistance level. That was actually the low that the market had made last March and last August. So this should represent horizontal resistance at this point in time. Today, the market tried to rally and add to those gains, and we can see that after the open, it continued to fade and drift lower. Let's take a look at the 1 month chart now. Here we can see that the market was trying to work its way higher, and then the wheels basically fell off. We can see the big decline here. We can see a bit of a snapback rally, and then we see the market actually pulling back today. On a 1-year chart, we can see that the market established a relative high, pulled back in August, made a new all-time high. Ever since that new all-time high in October, the market's been very weak. Sold off, had a nice little bounce, tested that support level, broke down, formed another support level here around the 133 level, and it looked like that might hold, but just this week we broke down through it. So on a longer term basis, I believe that we are still in a bearish market. We've recently had a breakdown. We need to test that capitulation low at SPY 125. The other thing that concerns me somewhat is that yesterday's huge market rally was caused by the Fed. That huge snapback was not what I would consider a true capitulation because it wasn't natural buying. That rally was caused by an outside influence, and I still believe, given today's market action and the pullback near the close, that this market still has to go down and test that level. I also question whether that SPY 125 level will hold. Lots of negative news, lots of write-downs coming. With that in mind, my bias is bearish, and I'm going to be looking for another bearish trade this week. This week's setup is called EDCC gap. It is a bearish day continuation confirmed. The setup, the very tail end of that movement, shows us a stock that's been in an intermediate term downtrend. It gapped lower the prior day, it held that loss, and it's down again today. Now, an important distinction about my gaps is that on the bearish side, I want to see a stock that has opened below the prior day's low and is currently trading below that low. So in other words, it's a true gap. It opened lower than yesterday's low and it's continuing lower. This screenshot is taken from my scanner. What I'll be doing is I'll be flipping through each one of these charts, and we'll be taking a look at a very nice trading setup. And what I'm looking for in particular is, remember, the market had a huge rally yesterday, and today it started to fail a little bit. So I'd like to see a stock that did not participate to any great degree yesterday, has been in a downtrend for the last week, and then today has gapped lower. Let's see what we can find. This first stock is Humana, and it would have been a great trade if we would have gotten in up here. Look at how the stock is gradually in a nice tight trading range lower. And this stock actually had been showing up on some of my EDCC trend searches because it had a number of days where it consistently had been making lower highs and lower lows. Yesterday the stock gapped down dramatically. We can see that even after yesterday's decline during a huge market rally, there was still another huge decline today that the stock went through on the open. I'll tell you, I wouldn't touch this with a 10-foot pole. The stock has fallen basically from $70 down to $35. It's lost half of its value in the course of a week. There's no trade for us here. This is PCP. This is actually an interesting chart because we can see that the stock has been in a very steady decline all week. Nice 45-degree angle here. The other thing we can see is that yesterday on the open, when the market had that huge gap up, the stock had an initial rally and then it sold off most of the day. And then as the market surged near the close, the stock participated. However, even after a big day like that, it still was not able to close much above the prior day's close. Very weak price action. Today, even though the market started off on a positive note, this stock right out of the gate started to fail, and it took out the low from yesterday and it closed right on its low. On a 1-month chart, we can see that it was in a fairly tight range and then the bottom drops out. This is a very, very bearish chart. We can see a lot of momentum in it. On a 1-year chart, stock has had a great year, kind of leveled off here. Then we can see that in December it started to waver a little bit. January it broke through the support level and it really fell quickly down to the $100 price level. We can see that there is 52-week support right there, right there. It's recently been taken out. And on the chart we can see that we're below $100, so this looks like a very promising candidate. Here we have Alaska Air. Stock is drifting down with the market. Doesn't really rally at all yesterday with a huge market rally. And then today we can see a breakdown, a big gap. Obviously this is why the search picked it up. A big gap down. And the stock continues to move lower and it closes right on its low of the day. It's a very bearish chart. On a 1-month basis, we can see a fairly narrow range here and a huge breakdown and a big acceleration to this sell-off. On a 1-year basis, the stock has actually been in a very, very narrow trading range here. You can see it's from about $23 to about $26. So this breach of $23 is very significant. Usually when stocks are in a very tight, long-term trading range like this, the breakdown is even bigger. And we'll take another look here. You can see how that $22 level has been broken. Then the stock's actually traded all the way down to $18. So we're right about here on the chart. So it looks like more weakness ahead.